So if you've been around trading for a little while, you understand what IPOs are. These are initial public offerings, and they can be a really good opportunity for good returns, but they can be complex and they are risky. So it's really important that you have an understanding of the process and do your research before diving in. And in this video, we're going to talk a little bit about IPOs and stuff that you need to know. So the basics, what exactly is an IPO? Just when a company transitions from being owned by private investors to being owned by the public. So this process, it does involve a lot of different parties like underwriters, regulators, auditors, lawyers, and it's a big step for a company, but it does also come with a lot of risks and considerations. So let's talk about the IPO process itself. And it starts with the company filing a registration statement with the SEC. That includes a prospectus. And this prospectus is an important document for investors. I'm saying investors, not traders that are just looking for that initial pop in price. And it outlines the risks that are associated with investing in the company. And once the SEC approves the registration statement, investment bankers will start marketing shares to institutional investors. And these investors are given priority allocation of shares before retail investors can buy them on the open market. Now, not all IPOs are successful. Some companies may not be profitable. They may not have a proven business model. So in 2008, Reliance Power was a highly hyped IPO, and it ended up crashing just days after it was listed. So it's really important to look past that hype and just analyze the financials of the company and the management team to see if there's any potential for success. Now, there's also different methods to IPO trading, such as SPACs and reverse mergers. SPACs are just shell companies created for the purpose of merging with a private company and taking it public. Now, these can be faster than traditional IPOs, but they also have their own risks. We have reverse mergers. That's a private company acquiring a publicly traded shell company to become listed on an exchange. And when it comes to conducting research for IPO trading, there's a few things that you want to consider. First, just analyze the preliminary prospectus to understand the company's business model and the financials. So it's important to stay up to date on the trends of the market, news related to the IPO, external resources like investment research firms can help with that. And all this can provide you with some valuable insight into the company and the market. And again, this is if you're looking to hold on to these. Now, the success of an IPO often depends on the promoter and the management team behind it. So you got to do your due diligence and you got to research their backgrounds and the reputation. Transparency is key. So you want to look for companies that are upfront about their financials and their operations. And when it comes to selecting a broker for IPO trading, transparency, reputation, top factors to consider. Now, to effectively trade IPOs, there are several things to consider. Company volume, market sentiment, financial data. These can all have an impact overall on that trading process. So it's really important to stay disciplined, have a well-defined strategy in place. Now, when it comes to timing your trades, just keep an eye on institutional investors' reactions and the offering price. Understand the lockup period, and that prevents insiders from selling their shares immediately after the IPO. So the question is, should you buy an IPO on the day it goes public? Well, it can be effective to wait for the hype to clear and look for entry points during any consolidation. And this is going to allow you to avoid that volatility that often comes with that first day of trading. Now, investment banks, they play a big role in the IPO process, and they can earn substantial profits. They're going to bring credibility. They're going to bring market expertise to the table. But again, you got to understand their role and evaluate their performance before making any decision. Now, IPOs can be a great investment opportunity when you get on the ground floor, but they also come with risks. So you got to do research. You got to have an understanding of whatever your investment goals are and develop a well-defined trading strategy. And with that right approach, you can get involved with IPOs. Remember, we're talking about IPO investment, not the ones that are just looking for quick little trades in and out of that market or that instrument. So that's going to wrap up this guide. I hope you found this video helpful in just understanding the ins and outs of IPOs and trading them. I want you to check out this free guide here. Make sure you download this trading indicator blueprint, totally free. Talk to you soon.